Good afternoon. My name's Jeff Quartermaine, and I'm the CEO of Perseus Mining Limited, an Australian company that's operating on the African continent, where we mine quite a lot of gold from 3 operations and have a number of development projects that we're looking at fairly closely at the present time.
Jeff, good to see you. Welcome back and Happy New Year. I think it's getting close to February. Maybe we can't say that anymore. Just put out your quarterlies and year end. What can you tell us?
Yeah, well, look, the quarterly is coming out. Is coming out on Wednesday. It is. I'm losing track of days, but look, it's a very good quarter for us. In fact, it's been one of the better quarters we've had for a couple of quarters now. So we produced 132,419 ounces of gold for the quarter at an all-in site cost of 1,127. So that, in the current gold price, has given us a very healthy margin of around $1,300 an ounce for each ounce we produced. Gave us national cash flow of $173 million for the quarter, and has left us with something like $704 million US dollars, or a bit over $1 billion Australian dollars in the bank at the end of the period of time. So it has been a very strong quarter, a very strong half year, and a very strong calendar year. Not only have we achieved production to the top end of our production guidance, but our costs have been below the bottom end of the cost range in the guidance. So it's been a very strong performance and very gratifying in many respects, because we did have a slow start we struggled a little bit earlier in the year where we had a few challenges at the properties, but they've all been overcome, and we're now really hitting our straps again.
Well, look, it's been a fantastic 12 months for gold producers. You know, this is a high margin environment for even the least efficient of the producers. But for you guys, can I just focus on where this margin is coming from, what you're doing to affect it? Because having the reliance on high gold price is one strategy, but managing your own efficiencies is another. So with a kind of portfolio of producers at the moment, and maybe one to come soon, what is your team focused on? What are you making them address?
Well, look, I mean, it's production of ounces at the lowest possible cost, and that is all we focus on, basically. You know, the gold price is somewhat irrelevant to us, and you can see the benefit of taking that approach, because our cost structure at a touch over $1,100 US dollars an ounce is not terribly dissimilar to what we were producing at maybe 10 years ago from the Edikan mine. Now, Edikan itself, this is our Ghanaian property, is producing at around $1,000 an ounce. Now, I don't think too many people, 5 or 10 years ago would have thought that Edikan would be one of the lower cost gold mines operating anywhere in the world, but it is today. And that's come about by a lot of effort, a lot of focus on the simple things, adopting small amounts of technological change where we can, and just keeping those costs well and truly under control. The importance of it is that in an environment such as we operate in West Africa, where governments have over time incrementally added to the fiscal take, what we need to do as a business is to be able to accommodate that by bringing our costs down at the same time, so that we don't have massive inflation as a result of that thing. And that's what we've been doing.
And talk to me about so there's the kind of efficiencies operationally that you're looking at, and I think one thing people are looking to at the moment more broadly, certainly your North American market, is what is going on in Africa, as they put it. I think sometimes I worry that I think Africa is a country. But there are some stories that are coming out of Africa, a little bit further about west from you guys, where it seems a hard place to operate. The jurisdictions that you're in, you're producing the ounces as you expect, certainly on a blended basis. How are things for you in country?
Well, things are fine for us in country. In fact, we have no problem whatsoever operating in any of the countries where we are. And I would argue that, talking to my colleagues here in Australia, they have plenty of challenges here in Australia, which classes itself as a first world country. And, it's no easier working here than it is, in Africa. I mean, it's about how you run your business. You can run a business very well or very poorly, no matter where you are. It really just depends on the attitude of the management team, the attitude of the workers, how you gel together and what you're trying to do.
Right. So as far as you're concerned, the jurisdictional aspect of this is a kind of global phenomenon. And you continue to operate in Africa, and you're known as an African producer of gold. You picked up an asset last year, clearly. How are things advancing there? Coming across any issues?
No, not really. I mean, in Tanzania is going along pretty well. We've had some very, very productive discussions with the government. We're advancing. What we're trying to do is to seek absolute clarity on all of the fiscal regime before we move forward. And we've had some really positive discussions and are very close to bringing that to a conclusion. And will mean that we'll get straight into full scale development and be producing gold in early 27. Now, what we have been doing on the ground is getting on with work, and we've had no issues whatsoever. In fact, actually, it's we've had a very positive experience in Tanzania, notwithstanding what reputation it had from 5 or 6 years ago.
Okay, and I'm going to stick with this as well, because I kind of feel it's this kind of sticking point. Because if I look at your share price growth, if you look at your kind of cash balance, $1 billion is extraordinary. The jurisdictional bit, I want to be able to kind of tick that off and go, right, I'm comfortable here. Obviously, people looking to what's happening in Mali. You've got government saying maybe we need a more share of what's coming out of the ground there, and some of that might be kind of retrospective, and some of that might be lack of clarity around what that fiscal environment is like. And the other part of it is that a lot of these governments are experiencing companies coming into country and just not allocating the capital. Now, clearly, you've got the capital to allocate. So, what do you see as those barriers? Is it just a question of getting an agreement that works for both sides?
Yeah, I think it is. Look, I don't know anything really about Mali or Burkina or some of those places, but what I do know is this: is that the world today is very different to what it was 10 or 15 or 50 years ago, and coming into the countries where we operate, people very reasonably expect to get their fair share of the benefit of their resources, because that's what they are after all. They are their resources, their national heritage. Now, what we have to do is that we want to seek a benefit as well, and it's a question of how do we allocate or how do we split up the benefits from what we're doing. We believe that, as professional miners, we should be rewarded for bringing capital to the table and intellectual property for being able to monetize these resources. So that's what we should be rewarded for. The countries, the governments and the community should be rewarded for the fact that these are their assets. And it's about finding the right mix and getting the balance right and making sure that everybody gets something from the operation. Now, that's easier said than done, because the big challenge is getting balance in that. And I've often said to people, well, you can increase your share, but at the cost of who? Do you want to take our share or do you want to take his share? How are we going to change the allocation? And that is the challenging piece. But I think, to think that you would go to any country and, exploit the place and take everything and leave nothing behind, I think it's not only is it very arrogant perspective, but it's morally wrong.
Right. Okay. So you alluded earlier to, and thanks for that. And I think it's some people don't like to talk about some of the issues out there, and appreciate you addressing that. Let's take a look at an issue you talked about earlier, which was about there were some sort of technical issues as part of last year. It's mining, of course there are. You've got to manage that, and you kind of got to, but you still got to deliver quarter after quarter those ounces. So getting that balance is important. Clearly, Nzaga is a part of that solution to continue telling that growth story. What do you think the timing is on that? What is the process that we are going to be looking at this year to bring those ounces online?
Oh, well, look, we had hoped to be in a position to make a final investment decision this month, actually, but I think it's not going to be this month, but it won't be far away. And certainly at this stage of the game, we're still on track to meet our original target of first gold in January 27. And if we get an extended delay coming through, then clearly that will jeopardise that schedule. But at this stage of the game, all of my team and myself are very confident that we can still hit that date.
Okay, so it's within tolerance, right?
Absolutely.
So in which case, what do you do with the current 3 projects in terms of extending life of mine and continuing to kind of be able to deliver those ounces out of those projects then?
That's actually a very, very much front and centre for us. In fact, today we announced our decision to open the first underground mine in Côte d'Ivoire, so taking an underground mine off the CMA pit at Yaouré. So that project has been fully approved. We've appointed Burncut as our contractor. That was announced, and they'll be mobilising on the site around April this year, and we'll be moving into development very shortly thereafter. So that is a really important piece of that project, and that can keep the Yaouré mine operating for quite a lot of years to come from now. At the other two mines, at Edikan and Sissingué, the mine lives are much shorter based on the reserve as published in June of last year. And so what we are doing, and what we have been doing for some time, is looking in the vicinity of the infrastructure to see what have we missed in the past. Is there an opportunity to cut back some of those pits that we did earlier and use, say, $1,200 gold price as our defining gold price? So they're all things that we're going back and looking at. Now, part of the thing, of course, is that going back to those propositions, by necessity, you will increase your all-in site cost. That is how you will be able to make those cutbacks. And we as a company need to decide, well, is this something that we want to do? Do we want to move Perseus from being an 1,100 ounce, dollars per ounce producer to a higher cost producer? And that's something that we are considering strategically at our board and looking at various opportunities to say, well, yes, we can produce more gold, but at what cost? So it's not about producing ounces, it's about producing money.
Well, it's about producing money, but explain that, because it may sound like vanity to say, oh, well, if we move from 1,100 to a 1,300 ounce, do you think that would damage your reputation? Because there's still a heck of a margin in there, right?
Oh, there absolutely is. But I mean, that's something that we've got to weigh up, just to put it in perspective. So if we designed our pits with, say, an $1,800 pit shell, that means that, the final ounce has a cut-off at $1,800. I mean, you'll be getting a lot more that is less than that, but that's the defining limit of your shell, which means that your costs are going to necessarily go up higher than if you'd used, say, $1,500 or whatever the number was, which we used to use before. So that's really a question now. Do you want to tolerate a higher cost? Now, that's all well and good while the gold price is high, but is the gold price going to be high forever? Question, and of course, a number of investors don't like the idea of you hedging at these prices because they think it's going higher forever in a day. But we could lock in a very healthy margin today by hedging at, $2,600, for instance. So these are the sort of the competing interests, I suppose. You've got to weigh this up against that, present yourself to the market in a way that's going to be appealing to the market, and make sure at the end of the day you do generate cash, because that is the medium by which you actually deliver benefits to those stakeholders I was talking about before. A higher share price does not deliver a benefit to a host community. Cash does.
It's interesting when you explain it like that. It's kind of interesting, the dilemma, because as you say, shareholders or even investors broadly listening to that commentary is like, one has to manage risk around, what will gold price be in a year's time or 3 years time, because these are long-term commitments that you're facing here. But let's get to the interesting bit where it's what every business is set up to do: make money, make cash, build up that cash reserve, and you're certainly doing that. And that's really a question of what do you do with it? And it's the eternal share buyback, dividends, M&A. How are you looking at it? Because you're building up cash extraordinarily quickly.
Well, we're doing all three of those things at the present time. I mean, we have declared a dividend, been declaring dividend for several years now, of course. And this year is the first year we've done a share buyback. So that's actually been working extremely well for us over the last couple of months, albeit, with the blackout periods that come when you're releasing quarterlies or releasing financials, there are some severe limitations on when you can actually do that buying back. So that is an issue. But no, we've been doing all that, and we've also been doing M&A. Of course, as you mentioned before, we did take over OreCorp last year and acquired the Nyanzaga project, and we've got a number of other things that we've been considering as well, and may or may not proceed over a period of time with some of these other things. But what we would clearly like to do is to use the opportunity now where we're generating a lot of cash to build our business into a business that's going to be sustainable well into the future, and that will be a reliable producer of gold, come what may, irrespective of where the gold price sits. Now, to do that, what we need to do is to bring some long life, large reserve assets into our portfolio. So that's what we're keenly looking for, and as is everybody else in the world, I might add. And there's a fair bit of competition out there, so it's not that easy. And in fact, we're competing with people that have different orientations and different funding capabilities, et cetera, et cetera. So as much as we might aspire to do it, we can't just turn it on just because we want to do it. So it means that you need to be consistent, work away methodically, know exactly what you're about, and execute when the opportunity arises. And of course, if you happen to build up such a large amount of cash that you can't spend, that's a first world problem. But certainly I know our shareholders and others would be very keen if we would, share that back with them, which we are doing at the present time. But they're the three balancing things really, growth, dividends and buybacks, and they're the things that we're trying to get the balance right once again.
Right. Okay. So I guess a careful cash management, or capital management more precisely. You sit on a couple of exchanges. I think the market's sort of been quite interesting in the last 12 months. What's your take, Ben, when you look back at 2024, so a calendar year, and maybe even looking forward? Do you expect it to be the same? Because you have performed, your stock has performed, your cash build-up is I guess unusual in this market. How do you view what the public market is doing at the moment versus maybe performance? Because there seems to be a disconnect there somewhat for some companies.
Yeah, I honestly don't understand the market at all. I mean, it leaves me quite puzzled quite often. But what I think is happening, though, is that investors are very well aware of the fact that globally there's a lot going on. Geopolitically, there's a lot of shifts, and I think a lot of investors are quite cautious by those changes. They don't understand and don't know where it's going to. So if you look at, say, the Australian market, for instance, I think investors in this country prefer Australian stocks because they believe they have much lower risk than, say, a Perseus that has African exposures. So even though we are an Australian listed company competing with Australian companies, doing a lot better than many of them, we are still undervalued relative to some of these companies. So what it means is investors are prepared to pay for lower performance levels if they perceive there's less risk. And I think perceive is the key point here, because, a lot of investors don't understand risk, certainly don't understand geopolitical risk, and immediately assign high levels of risk where it doesn't actually apply. And I would argue that Perseus, which operates in 5 countries, including Australia, we do have a good spread of risk, and that we don't carry this massive amount of risk that people believe would come from an African business.
Tell me, and I guess it's really for the kind of the North American audience listening, watching or reading this, is you mentioned sort of the performance of Western Australia companies and some of the issues faced in Western Australia. It comes back to this kind of jurisdictional component. Most people love to quote, Fraser Institute, Western Australia ranks, definitely top 5, if not number 1, depending on who you're talking to. What are some of the things that are going on over there?
Well, look, I mean, it's no different to North America or anywhere else for that matter. But you have labour issue as a major issue in Australia. Retention of labour, training of labour. That is an issue. You have green tape, you have black tape, you have red tape. All of the government institutional things come into play. I mean, it's pretty clear. One of our friends at Regis had a project knocked off quite recently by the Environment Department of the government. They'd been working on licensing that project for 10 years. And then right at the end, the government decided to withdraw the right to develop that project. Now, the irony of that is that in that same 10-year period, while our friends at Regis were working very, very hard at getting that project running, we licensed and built 3 mines in Africa. So much for political risk and jurisdictional risk. I mean, that's a bit of an extreme case, I have to say, but it does illustrate the point that nowhere is simple. There are challenges and peculiarities everywhere. I mean, North America has more than its fair share of of challenges at the present time. So I don't believe that, that the miners over there are any better placed than what we are operating on the continent in Africa. It's what you know, and it's how well you do the business.
Yeah, it is. Okay, so we've obviously seen this kind of slight change and shift in investing in the past sort of 4 years or so. Explorers, whether it's in gold or any other commodity which is doing well at any one moment in time, are not finding it easy to access capital. The capital has outflow from mining broadly. Advanced developers and producers are seeing some attention because they're at or near revenue. Do you think companies should be judged on the revenue that they create and not just about I guess sentiment?
Well, look, I mean, at the end of the day, it's an interesting question, and it depends on your perspective entirely. I mean, if you're a short-term investor, you want the stock price to go from A to B as quickly as you can, provided it's going up, and you don't care about what causes it to go, just so long as you can buy low, sell high, right? And a lot of people do have that view. Now, if you're somebody who takes a much longer term view and are value focused, you'll want to know that the business is actually making money because it's doing well and it's sustainable. It's going to keep doing it year on year out. And so that's a sort of a difference in, I guess, in investor style, isn't it? I mean, there are deep value investors and there are people, hedge funds and the like, who trade and what have you. So it just depends on the perspective of the investor. And it's not to say that one view or the other is right or wrong. They're very different and they've all got a place in the marketplace. Now, we as a company, we focus on producing long-term value for our investors and for all of our stakeholders, I might add. It is what drives us. We want to have long-term value creation. And if people like that, I guess they'll, mark us up in the stock market. If they don't like that, they'll go and buy somewhere else.
Can I ask you about the divestiture of the Montague Gold stock? Because people read different things into that. Was there a question of you felt that stock was fully valued? Did you feel that the asset didn't meet your criteria in terms of your diligence, or was it not a meeting of the minds when it came to the management team? How should we interpret that?
Oh, well, you can interpret it how you like, frankly. I don't really mind. But, look, the fact of the matter is that we acquired that stock when we acquired the Walker company. It wasn't a core asset, and we were never going to be able to influence the direction or outcome. And so an opportunity presented us to make quite a deal of money. And there's not too much wrong with doing that, unfortunately. We're quite prone to looking for those opportunities. So it was a little bit opportunistic. And we wish them absolutely the very best of luck, because we never want to see any company or project fail. I mean, they are operating in our backyard, and if they aren't a success, then people are going to start to wonder about Côte d'Ivoire. So far from having any issues with the management team or whatever, we actually know the guys pretty well and get on very well with them. It's got nothing to do with it at all. But I mean, look, people will make up their own minds around these things, and no matter what I say, it's not going to change that.
Okay, and one sort of final thing, it's really about, I guess, mood. Trump's in. Drill, he says, about oil and gas, and one expectation around permitting of mines in North America as well. But there's also this feeling that the anti-woke era is upon us. What does that do or do you think it changes things when it comes to, I guess, the sustainability, the kind of green agenda, the net zero agenda, and how that affects mining? Does that kind of need for social license disappear? Are there going to be less regulations around that? And does it change your behavior in country?
Yeah, look, that's a very good question. And I was actually thinking about this very subject today. In fact, it makes zero difference to us, what has occurred in recent weeks. Social license to operate for us is vitally important. It was in the past, and it will be in the future. In fact, you can have the best assets in the world and the most money in the world and the greatest people. But if you're not welcome in a host community or a government, you don't actually have anything. So we will continue to put the same level of effort into our ESG. We never called it ESG, I might add, but going back in time. But we will continue to put the same level of effort into it into the future as we have done in the past. It might mean that we're probably going to be harassed less by some of the fund managers who have made a bit of a thing about this in the past. But it'll be what it is. But no, it's an interesting thing. I mean, it makes no difference to our business at all. In fact, we're going to, continue to work hard and do as best as we can to make sure that our communities benefit from us being there.
Okay, and so I keep saying it's the last question, but it's such an interesting company. If I look at the kind of investment metrics by which we judge companies, it sort of refers to a question I asked earlier, but in the way that you look at the company, you say things that mining is different from 10 years ago, from 50 years ago. You said earlier to me. What do you think companies will be judged on in 2025, 2026, through 2030? Because have those things changed, or is it just a kind of risk-off market, and it will kind of get back to the way it was?
Well, as I said, it depends on who the judge is and what their business is as to how you're going to be judged. To some degree, we can't change that or control that. What we can control is how much gold we produce, what cost we produce it at, and whether we do the right thing by our communities and hosts. We kind of have the faith that if we do those things very well, we're going to be looked upon favourably going forward. And so that's where our focus is. As to what other people do and what they choose to do, how other people want to judge, that's up to them. But we're going to focus to the best of our ability on generating, cash flow, generating wealth.
So fundamentals matter.
That's it.
Sounds simple when you say it, doesn't it? Right. Thank you very much for your time today. Congrats on the quarter results. Continue to that kind of stronger creative growth, which we like to see. We'll see you soon.
Yep, very good. Thank you very much for having me.